guys have that? 30%.
This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher today. Some of this strength linked to the better than expected building permits report that we did see earlier. Also, housing starts about as expected, but it looks like traders focusing on the permits number. Of course, we do have the Fed meeting today and tomorrow. Most likely at the conclusion of this two-day meeting, the Fed will announce another $10 billion in taper from its quantitative easing program, taking their monthly purchases of treasuries and mortgage-backed securities down to $55 billion per month. Some traders are looking at this as a bearish factor, which it is in itself, except for the fact that we do have the Fed funds rate remaining at the historic low of 0 to 25 basis points. I think that is enough, a combination that will continue to underpin this market and continue to support the bull market that we have seen in stock index futures. So look for more of the same. Further gains are likely. Over in the currencies, a little pressure in the euro currency. This after an index of German investor and analyst confidence coming in on the weak side, although a lot of this may have been linked to the situation in Ukraine as one of the reasons for the weaker number. Longer term, we feel that the euro currency will probably hold up relatively well. One currency that I think has a lot going against it right now is the US dollar, as interest rate differentials continue to be bearish. Also, we are seeing somewhat slower growth here in the US, although we did see those better housing numbers today. Another factor I think that is a negative for the US dollar is that the dollar should have been very strong in light of what has happened in Ukraine as far as its flight to quality influence, and yet the dollar very much underperformed in the period where there was so much news in Ukraine, and even now the dollar seems to be underperforming. So I would look for further weakness in the dollar index, and I think this is a trend that will last for quite some time. In the credit markets, most analysts and traders, I believe, are bearish, looking for the taper from the Fed to take this market lower. Our feeling is that treasuries are likely to head higher as we see additional evidence that growth in the global economy may be slowing. So from here, even though we're just steady today, I think we can see higher prices on the day, and I think we can see higher prices longer term for the Treasury futures markets. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.